Hello and welcome to Unacademy IAS, a one-stop destination for all the English medium civil services aspirants. Welcome to another session of Economy Made Easy, wherein we take current affairs, economy related events and analyze these events. In today's session, let's analyze why the stock market indices, that is the Sensex as well as the Nifty, have crashed, which has led to wiping off of more than 17 lakh crore worth of market capitalization. And in addition to this, let's try and understand why this particular fears of USA's recession in the economy is affecting the global sell-off. Before I start the discussion, if you are interested to learn from me as well as the other members in the team, Sarmat sir, Chetan sir, etc., we are offering a 12-month UPSC CSE subscription at a price of 29,999 rupees. You will get the access to all the English classes. In addition to this, if you want to get access to the English as well as the pure Hindi medium classes as well, you'll be able to get with this single subscription. If you are interested, please do check out the details. The link is provided in the description. Now, today after the market opened, this is the headline in the Hindu website. The Sensex Nifty crash in line with selling pressure in global markets on USA growth fears. As already mentioned, by the time I record this video, more than 17 lakh crore, mind you, more than 17 lakh crore worth of market capitalization has been wiped off. What is the reason? Why there's a concern regarding the USA market? Are there any other factors in addition to USA which are affecting this particular performance, or let's say the event in the Indian stock market? Let's try and understand one by one. The biggest factor which has contributed to this crash in the stock market is the performance of the USA economy. Very recently, certain data has been published for the USA market regarding employment as well as unemployment. For the month of July, the market in USA was expected to create around 1.85 lakh jobs. Around 1.85 lakh jobs. And this was on the background of the market creating somewhere around 1.79 lakh jobs for the previous month, that is for the month of June. So it was only expected that it would increase, more number of jobs would be created for the people who are present in the USA market, and that would basically provide a good indicator regarding the performance of the economy. But as opposed to this, for the month of July, the number of jobs which have been created is somewhere around 1.14 lakh jobs, which essentially means the market in the USA is not performing very well. Point number one. Point number two, the number of people who are filing for the unemployment assistance in USA has increased. So the financial assistance or the financial aid that is provided by the government is being sought by more and more number of people now. Point number three, the unemployment rate in USA has hit a 3-year high of 4.3%. A 3-year high of 4.3%. And mind you, some of you might be thinking, sir, if USA is suffering, why should there be a problem in the global market? Why should there be a crash in the Indian stock market? USA is the largest economy in the global market. If in the global market the performance is not good, automatically there will be a reflection of that in the stock market where investors will start losing confidence. In addition to this, regarding the USA market, there is also one more concern, and that particular concern is Federal Reserve. The Federal Reserve, that is the Central Bank of USA, it was expected to reduce the interest rates. The expectation was the interest rates will be reduced and this will provide an impetus. It will promote production. It will promote investment in the economy, and that will help higher economic growth rate in the USA. But the recently concluded review by the Federal Reserve, it has decided that they will maintain the same interest rate, but looking at the situation right now, they would be cutting down the interest rates only in the month of September. And this was done in order to maintain inflation rate or control inflation rate in the USA market. Now, various experts are concerned. Their concern is that has the Federal Reserve kept the market very tight in terms of higher interest rate for a longer duration? And if so, automatically it means that because of higher interest rates, loans are costlier. And because the loans are costlier, investment will take a hit. And because the investment has taken a hit, this will be reflected in the poor performance of the economy. And to add to this particular factor, now many experts are pointing out, look at what is the Purchasing Managers Index, PMI. Look at what is the performance of PMI. The PMI, which was more than 48 for the month of June, has in fact fallen down to below 47 for the month of July. And PMI, that is a Purchasing Managers Index, should be more than 50, which generally indicates expansion in the production. So the PMI has been declining, and that is the reason, putting together all of these factors, now the market is concerned. The concern in the market is that the market of USA or the USA economy might be heading for a recession. And this has been one of the contributors. This has been one of the contributors which has led to lot of sell-off in the global market, including even the Indian market. Is this the only factor? Absolutely no. In addition to this, the second very important factor is what has been the policy of Bank of Japan regarding their monetary policy. Very recently, for the first time, the Bank of Japan did away with the concept of negative interest rates and increased the interest rate to 0.1%. And last week, the Bank of Japan has doubled down, has in fact increased the interest rate once again in more than a decade. Second consecutive time, the Bank of Japan has increased the interest rate by 15 basis points to 0.25%. And when the interest rates increase this way, when the interest rates go up this way, obviously it will have a huge impact on lending, borrowing, and not only in Japan, but also many investors who had borrowed in Japan at a lower interest rate to invest in the foreign markets. Now they will have to pay out more interest rate, and that is the precise reason there is a technical term, unwinding. Please remember, there is a technical term now, unwinding. What do you mean by unwinding? Many of these investors looked at the interest rates in in Japan and other markets. The interest rates in Japan was 0.1, and in other markets interest rates were slightly higher. So they wanted to leverage this situation, borrow in the Japanese market, invest in the foreign markets, earn better interest, earn better returns. Now with Bank of Japan increasing the interest rate to 0.25, this has actually led to investors being worried about higher interest rate or increased interest rates in Japan now. They are selling off. It is basically unwinding their position. They are selling off their investments, and that has led to lot of, let's say, the sell-off in the global market, including the USA market, and now this has actually spread to the NSE as well as the BSE. That's a second very important factor. Third very important factor that has contributed to this bloodshed in the stock market is the valuation factor. The issue of valuation. What is the concept of valuation here? In case of India, the NSE, that is the Nifty as well as the Sensex, have been peaking higher levels for the last 1.5 years. But at the same point of time, there is also a concern that is the market valuing? Are we valuing the instruments in the right way? Are we overvaluing the instrument? In essence, are we paying more for an instrument than what is the actual value is? And if there is a lot of overvaluation, the market at one point of time will correct itself and there will be a huge crash in the stock market. The prices, that is the market prices, will simply crash. And many of the experts are attributing this small drop, or let's say this particular crash in the Nifty as well as the BSE Sensex to issue of overvaluation itself. In addition to this, the fourth very important factor that is contributing to the global sell-off, including India's sell-off, is the uncertainties. The uncertainties or the volatilities in the global market. For example, the recent events between countries in the Middle East, the possible of attacks from one country to another country has actually rattled the international market. And this particular or this event or the possibility of the further events, retaliation from one country on another country now, and this leading to more volatility in the market has actually led to the market sell-off today itself. So these are the four very important factors that have contributed to the major sell-off in the USA market, in Indian market, etc. And as a result of this, more than 17 lakh crore worth of market capitalization within couple of hours has been wiped off. That's it from my side in today's video. If you like this initiative, hit the like button. And if you're yet to subscribe to our YouTube channel, kindly do it right now. Thank you. Have a great day.